So, you think you've got a handle on how global finance works? Well, get ready because we're about to pull back the curtain on the hidden wiring that connects, well, everything.
For the longest time, the thinking was pretty simple. The US economy sneezes and the rest of the world catches a cold. It was a one-way street. The US was this big financial island, right? But is that really the case anymore?
Nope, not even a little bit. See, ever since the huge financial crisis back in 2008, the entire system got a total makeover. It's like the old rulebook was just tossed out the window. Now we're living in this new, hyper-connected world. And today, we're going to trace the map of how it all got rewired. All right, first up, the post-crisis reshuffle. And the key thing to get here is that the very game of finance has changed. Think about it. Before 2008, finance was pretty straightforward, right? Banks lent money to you for a mortgage or to a local business to expand. That was the engine. But after the crisis, that engine just stalled out. All of a sudden, the biggest game in town wasn't funding the next startup. It was funding entire governments. And the star players weren't your traditional banks anymore. A whole new crew stepped onto the field, the global money managers.
And look, the data backs this up in a huge way. Since 2009, the growth in financing governments has just gone through the roof. Meanwhile, lending to regular folks and businesses kind of flatlined. The whole system just pivoted. And that one change, well, it changed everything.
Okay, so if the old school banks aren't running the show anywhere, who is? Well, let's meet the new bosses, the non-bank financial institutions. You'll hear them called NBFIs.
And when I say they're the new bosses, I'm not kidding. It's been a quiet but absolutely massive takeover. I mean, look at this. By 2023, these NBFIs held more than half of all global financial assets. They are, without a doubt, the biggest players in the room now. So who are these mysterious global money managers? Well, they're not that mysterious, actually. We're talking about the pension funds that manage your retirement savings, the insurance companies you pay every month, the mutual funds and ETFs you might have in your own portfolio. And yeah, you've also got the big guns like hedge funds and these enormous sovereign wealth funds. All these different groups are now right at the heart of the whole system. And if you want a sense of just how fast this happened, just look at one corner of this world, private credit. Back in the early 2000s, it was basically nothing, a rounding error. Today, it's a $2.5 trillion industry. That's not just growth, that's explosive, rocket ship growth. And you see that pattern pretty much everywhere with these guys.
Okay, so you've got all these new players all over the world using all these different currencies. How in the world do they all work together? How does a pension fund in Europe easily buy something in America? Well, there's a crucial piece of financial plumbing that makes it all possible. It's kind of like the market's secret handshake. It's called an FX swap, and it's simpler than it sounds. Let's say you have euros, but you want to buy something that's only sold in US dollars. An FX swap lets you temporarily trade your euros for dollars, make your purchase, and, here's the key part, it locks in the exact rate you'll use to swap them back later. It completely removes the risk of the exchange rate changing on you. It's like a universal adapter for money. Let's walk through a real-world example. So a European pension fund wants to buy a US government bond. Problem is they have euros and the bond is priced in dollars. No problem. They use an FX swap. They give their euros as collateral to borrow the dollars they need. Then they use those dollars to buy the bond. And later, they just swap it all back at that pre-agreed rate. Boom, they get the investment they want with absolutely zero risk from currency swings. And this isn't a rare thing. This exact kind of transaction is happening constantly, stitching the entire global market into one giant piece of fabric. Now, try to wrap your head around the size of this market. At the end of 2024, we're talking about a market worth $111 trillion. That is just an astronomical number. It's bigger than the entire planet's GDP. It's this massive, hidden ocean of capital flowing around the world completely out of sight. So let's recap. We've got new players, these giant money managers, and they're using this secret handshake, the FX swap, to connect everything. So what's the result of all this? Well, it's a whole new world order. A world where financial shocks don't just start in one place and spread out slowly. Now they travel everywhere, and they do it almost instantly. The bottom line is this. Global financial markets are now tangled together like never before. A hiccup in one major economy doesn't just cause ripples anymore. It causes a tidal wave in all the others. Everything moves in lockstep in a way that's totally new. Remember how we said it used to be a one-way street with the US sending shocks out? Well, now it's a two-way highway, and traffic is getting heavy. The US definitely still sends out its fair share of shockwaves, but now it feels the tremors coming back from other economies too. And that inbound pressure is getting stronger all the time.
And this quote from the analysis really just says it all, doesn't it? Contrary to conventional wisdom, that whole idea of the US being a financial island, it's over. It's now just one really, really important hub in this massive global web. Okay, so this brings us to the biggest question of all, the real so what of this entire situation. If everything is this connected, is anyone actually still driving the car? Can a country's own central bank, like the Fed here in the US, really control its own destiny anymore?
So, who holds the power? Well, the data is actually pretty clear on this. Even with all these global storms brewing, what a country's own central bank does still has the biggest impact at home. Domestic policy still packs the heaviest punch. So here's the final takeaway. Yes, central banks are definitely still holding the steering wheel. They can guide their own economies. But, and this is a huge but, the road they're driving on has changed completely. They're not on a quiet country lane anymore. They're in the middle of a massive, chaotic, global superhighway with stormy weather all around. They have to constantly watch out for what every other driver is doing.
And that leaves us with one last big thought. In a world that's this wired together, is being a financial island even a real possibility anymore? Or has global cooperation gone from being a nice idea to being the only way to stay afloat?